headquartered TVS Supply Chain Solutions IPO will hit the Lal Street on Thursday, August 10, becoming the third main board IPO to open this month. The IPO, which will run till Monday, August 14, is a mix of offer for sale of up to Rs 280 crore and a fresh equity issue of Rs 600 crore, taking the total IPO size to Rs 880 crore. The company has priced the IPO in the range of Rs 187 to Rs 197 per share. Investors can bid for a minimum of 76 shares and in multiples thereafter, meaning that retail investors will have to shell out nearly Rs 15,000 for one lot of the IPO at the upper price band. In the IPO, 75% of the offer is reserved for qualified institutional buyers, 15% for non-institutional investors and the rest 10% for retail investors. TVS Supply Chain is focused on fulfilling the logistics needs of corporates related to sourcing and procurement of raw materials across sectors. It has a formidable and growing client base comprising of more than 70 Fortune 500 companies. Along with it also has a strong parentage of TVS Group, which augur well for the company. However, the company has incurred a loss in FY21 and FY22 with a cumulative loss of Rs 118 crore due to the pandemic impact. Although it swung back to black in FY23 with Rs 41.7 crore profit. Its revenue grew by 23% annually to Rs 10,235 crore between FY21 and FY23 on a consolidated basis. Apart from this, the company's financial performance is directly proportional to the demand scenario faced by the clients. Any demand slack faced by customers will therefore directly affect the company. Amid this backdrop, analysts believe the IPO is more suited for those investors who have a higher risk appetite. They also advise bidding for the IPO from a medium to long-term view. Dhruv Mudradi of Stocksbox said that strong listing gains for the IPO look capped due to rich valuations, although a strong client base and parentage make him confident of future growth prospects. The use of IPO proceeds to retire long-term debt is likely to aid the financial performance of the company going forward, he said. etmarkets.com also connected with Astha Jain of Hem Securities to get her views on the IPO. Jain recommends subscribing the IPO for the long term and is unsure of listing pop. Here's what she said.
Although the EBITDA margins are at little lower side of around 6%, as well as net profit margins are also at lower side, but the way this company is growing, they have a very strong set of clients, and the client stickiness is the major benefit to this company because they have an esteemed set of clients who are connected to the company since last so many years. I mean more than 10 years or so. So very strong set of clients they have. They are operating in very high growth industry, and it is backed by a very strong group, which is TVS Group. So looking after all the parameters, we are recommending a subscribe to this issue. Now, if I talk about only for the listing gain, so I think that those who can take little risk, they can apply for little listing gain also. But our main view is about the long term. So this issue is looking good to us from the long term perspective also. Listing gain may or may not happen, but definitely in the long term, this company will, I think, will show a strong momentum in the stock price wise also. So we are recommending a subscribe to this issue. For the risk takers, it can be for the listing gains, but mainly it is for the long term subscribe only. So we are recommending it for long term purposes only.
Thanks for watching. That's all in this video.